Folks, welcome to Thursday Night Stock Charts Live. Happy Friday Eve. And what we're going to talk about tonight is legislation that has been submitted to Congress that is the first piece of legislation, I believe, regarding central bank digital currencies. But it's not what you think. Stick around. It's actually a good thing. We're going to talk about economic data. We're going to talk about why I think equities are going to rally. Yes. Usually we have a bearish tone to us. Today we covered pretty much all of our put shorts. Well, we bought some puts on what did we buy? Qs, Netflix. We covered all those shorts today. I still own SQQQ, which puts you short of the triple Qs. I'm probably going to bail on that. And I'll go over the weekly charts and the daily charts, and we'll talk about why I think that we're going to get a rally. We're going to talk about the Federal Reserve's balance sheet. Did it grow last week? Did it decline last week? Is there a liquidity issue out there that we should be worried about? We'll talk about our Netflix trade, our Qs trade. We'll talk about the yield curve. Let's get to it. First, let's say hello to people. Sean, first, he was posting before we were live. Email and write your congressmen and congresswomen and senators to stop crypto digital currency from happening. I couldn't agree more. You need to be extremely vocal. We only get one shot at this, because if you're wondering why all this is happening, it started really under Obama, all this shenanigans with the woke culture, the Antifa, the lack of common sense, the defunding the police, all this nonsense is a race, folks. It's purely a race to the next election. And that election, they must by then have implemented the Chinese model of surveillance. They need people willing to buy into the need for security, as we needed to buy into health security a couple of years ago when we got grifted on COVID. So now the new grift is going to be security, but this time it's going to be national security, national security, defense security, something like that. Anyway, they need to get the just like with the Patriot Act, they took away our rights with the Patriot Act. They were supposed to be surveilling non-U.S. citizens in the United States, but they ended up surveilling U.S. citizens, presidents, soon-to-be presidents, congressmen. So this is just the next step. The next step is they want the Chinese model. The thing is, they can't have you voting on it. They got to get it in place before the next election. So that's why you're seeing all of this nonsense, shooting down balloons, all of this nuts. They don't want you paying attention to what they're doing in Washington. They want this Chinese model. And the cryptocurrency, the digital dollar is a part of that. That is the end game. We're going to talk about it in a moment, but that is the end of freedom. Sam, hello. TZ Burton. Good man. Pedro, welcome. Hey, Bob. Looks like AGQ indicators getting ready. Yeah, silver got killed today. Well, you know what? I want to talk about silver later on. I was going back and forth earlier with fellow member Larry. I don't know if he's on. About I was thinking about buying some nugget, and I was looking at the dollar, because you need to look at the dollar. He stops me. He's like, wait a minute, the dollar can keep going up. I'm like, I know. So he kind of talked me out of putting on the nugget trade. So if it goes up tomorrow, I'm going to blame Larry, but it's all good. So yeah, we'll take a look at silver. Scum grifters coming up with the craziness. Yes, they are grifters. They're not good at anything else. That's what they're good at. All right, let's get to it. First, what we want to do is share my screen before I forget. All right, folks, before we get into it, I'm going to ask First, if you're not part of our 30-minute chart club, we meet a couple of times a week. It's a really great time where we spend some time going over the 30-minute charts, great setups of the same charts over and over and over again so that we see what stocks are doing well, what's setting up nicely. And tonight, as a matter of fact, we'll go over the 4 that were reviewed on the 21st to see whether or not we were accurate and whether or not they would rally. So join the 30-minute chart club. It's a private live stream. I keep it private to avoid the spammers, to avoid I love the side talk on these live streams, but this is really just quick hits, taking a look at charts, and you do not need to be an experienced trader. Anybody could join. Just be serious about trading. Ask questions. It's an open forum. And 30-minute chart club, link below. Enter your email address right before we go live. I will send out an invite. We'll probably meet on Saturday, this coming Saturday at around 2 o'clock, I'm thinking. Mark it on your calendar. And 30-minute chart club, link below. Folks, the show is sponsored by our friends over at TrendSpider, AI in charting, automated technical analysis. If you're not currently with them, trust me, I'm a sponsor. I get to see how many people are joining up. A lot of people are joining up and they don't cancel. I know when people that I refer cancel, they don't cancel. So they're sticking with their subscriptions because there's value in it. I'm going to show you how we use it here tonight. So stick around. Link below, 35% discount code. Let's get to it. All right. So economic data this week, there wasn't much, but what there was market moving. The FOMC meeting, a hodgepodge of nonsense, to be honest with you. GDP was released today, the revision for Q4. It actually came in by a couple of bips. Not much of a change, though. Tomorrow, we get the PCE index. That's the Fed's favorite inflation index. So we'll be watching that very, very closely tomorrow. New home sales. I don't expect them to be good. We have a bunch of Fed heads out tomorrow. Bullard, Mester. Mester just said she wants a half-point hike tomorrow. They're all going to be talking late morning, early afternoon. So buckle up, especially at 10:15 when Mester talks, to see whether or not she reiterates her 50 basis point rate hike. I know Bullard was on CNBC yesterday morning. Didn't do much to the market, so I don't think he said anything that was really obscene. So let's take a look. Okay, so we went short of Netflix. We bought put options. Why do we buy put options? Because they were cheap, very, very cheap. So we bought them as we hit this upper band of resistance. And today it broke support. It sold off. It sold off pretty hard today. They reduced pricing in like 41 countries, and they killed the shares. And I saw the stochastics. They were very oversold. It was oversold intraday. I said, you know what? If not now, when? So I booked profits, and we may even look to trade this to the long side now and the rest of the market as well. So we'll watch it, but the easy money's been made. You don't want to stay too long if you are not grossly bearish on the overall market. If you own put options, if you're selling put options or you're selling premium, different story, different game. The options were cheap here. It made sense to take a directional bet, and we won. We did very, very well. We bought a deep in the money put. We sold a deep out of the money put. That's what you call a bear put spread or a debit spread, whatever you want to call it. Call it cupcakes. It doesn't matter. It made us money. So Netflix, profitable. Qs. We had gone short of the Qs. I saw a reversal off the lows of the day today. Stokes were oversold, and we booked profits because I think that while we have been in a sideways market, we may be getting ready for a breakout. Now, I'll tell you why. There's a few reasons. One is the yield curve. Earlier this week, this is a weekly chart of the yield curve. For those not familiar with the yield curve, it is inverted. In short, this is a very bearish event that's taking place. And I'll save you the technical jargon. We're not supposed to be here. And what we're looking for on this weekly chart is a breakout above this upper band of resistance. And you may be looking at it saying, hey, you're not there yet, pal. You're not there. We were on Tuesday. On the close of Tuesday, we had a breakout on the yield curve. But this is a weekly chart. A lot can change. Last night, it pulled back further. Still a breakout, but we had the Fed minutes that came out, and that impacted the yield curve, and it brought it down lower. So today, it came in even more, and I suspect that it's going to come in even more. Why? 10-year yield, not that it has anything to do with the yield curve. This is 2s versus 10s. But the yield curve is weak, allowing for a stock market rally. When you take a look at the weekly charts, you'll remember this time last week, and probably for the past few weeks, I've been saying, be careful of this market. You have a breakout on the 10-year yield, and this week we have new higher highs. We have a serious breakout. We're flirting with a 4 handle on the 10-year yield. Equities are holding up pretty well. The Qs are holding up pretty well. Why might that be? The reason I think is that they're already cutting heads. They're cutting costs, expenses, and they're able to absorb a higher ceiling on interest rates than what they normally would have been able to do. So able to do 6 months ago to a year ago. Now, we are nearing prior highs. The small caps, I would be very, very careful of, because many of those names, including the ARC names, Kathy Wood's fund, they weren't making money at 0 interest rates. I don't know how they're going to make money in a weakening economy and when yields are measurably higher. So on that point, to draw this home, when you take a look at the high yield debt market, the junk bond market, it is rolling over, or was rolling over. It just reversed on the week. Last time I looked, this was tanking. So the junk bond market, which is corporate debt, high yield corporate debt, was oversold. It bounced. I'm wondering whether or not they have premium here. Nah. I'm looking to see whether or not the options are expensive. They're not. They're very, very cheap. All right. So I was thinking about selling premium. So high yield debt is under a lot of pressure. So that's the bond market. Another way of the many ways they send you a signal is sending you a signal vis-a-vis high yield debt that all is not well. High yield debt is in trouble, even though we've had a 2-day rally. Frank Land, hey brother. Pedro, long from support. Regarding what? Can you just that's probably related to one of the charts I just went over, and I'm not sure what chart you referenced. I will answer your question more than happily. TZ Burton, I'm going to buy more crypto. Wise move. Nice rebound on crypto. At least Bitcoin anyway. Bond prices rallying off the lows of the week. And the reason why this is happening, I went over this with members last night, is that when you take a look at the 10-year yield daily chart, oops, wrong chart. Daily chart, I mentioned this last night, that these stochastics were flatlined and that we should expect a correction in yields and a rally in bonds. That's exactly what happened today. So the pullback in yields is going to allow for a rally in equities. It depends upon how long this rally or pullback on yields lasts. but it looks as though there's more pullback to be had here. So this is another reason why I think that we're going to get at least a short covering rally in the market. Pedro, Netflix. Okay, yeah. No, I was short. I bought the puts. So if I said I was long, I meant to say short. I went long of the puts. Here's Netflix. We shorted it up here, right when it hit this upper band of resistance. Added more on a threat of a break, and we got lucky. So, yeah, we shorted it at the upper band of the rising uptrend channel. We did that twice already. This is our second time. Good risk reward entry point. Okay. Why else do we think the market's going to rally? Tip market bouncing off of support. Fear of an aggressive Federal Reserve would hurt the tips, and it has been hurting the tips. Today, that fear came off a little bit along with yields. So yields pulled back, tips rallied. This is all about the Federal Reserve. Traders are thinking, what's the Fed going to do? It's really ridiculous. Right? It has nothing to do with earnings. It has nothing to do with earnings. It has everything to do with the Federal Reserve. So the chip market, another way the bond market's sending you signals, rallied today. If you want to take a look at a daily chart to validate that, here you go. We're oversold. Tips can be bought for a trade here. Good inside day today. I think we press higher here. Not immediately. The dollar. Now, earlier I mentioned this, that the dollar had some indications of weakness. And today we backed off some. This is a weekly chart. These are all weekly charts. And we hit resistance. So why does this matter? Well, the dollar makes multinational earnings, a strong dollar makes multinational earnings weaker because the currency conversion to US dollars hurts them. The strong US dollar hurts them. It also hurts their sales because US products are more expensive because they're priced in US dollars. So if the dollar is too strong, it's not good for multinationals. That's why big exporters like Japan, Germany, they always want a weak currency because it makes their goods affordable overseas. So the dollar had pulled back today. And we're very long in the tooth here on Stokes. We came close to the 200-day moving average. And I highlighted this chart about a week ago, actually more than that. I updated it. This is a head and shoulders setup. Left shoulder, head, right shoulder. Now, simply because I threw some drawings on a chart does not mean that it's going to follow through to the downside. So it could just get negated. Dollar can go pressing all the way up. This is just an observation. When does it become real? We break down below. Let's call it 28 on the dollar bull ETF. Then that's a real breakdown on a head and shoulders setup on the US dollar. That would be good for equities, good for gold, good for silver. We're going to go over silver in a moment. We're going to go over gold in a moment. Now, to know whether or not the dollar is going to pull back, you got to look at the euro. Euro's been weak all week, off the lows slightly, daily view. And what I'm doing right now is I'm assessing the probability of the dollar pulling back. I need to know what the euro is doing. I need to know what the yen is doing because they're counterparties in the Dixie basket. So the euro makes up 55% of the Dixie basket, and it must rally. And on a daily time frame, this is very oversold. We had a reversal bar today. I think that the euro is going to rally. Will it last? I don't know. I'm not that smart, but I have a strong probability that it is going to rally in the coming days. And that will be bearish for the dollar. Now, the yen is very oversold. Weekly time frame, It blew through the lower band of its downtrend channel last week, but it looks as though we got a pop today, and we did. Stokes are very oversold. So I think that yen, euro could be bought for a trade. And you can look at gold. You can look at, we're going to go to those in a moment. Look at them. I'm not saying buy them right now. We'll make more of a determination in a moment. And we're probably going to be looking to buy Nugget. I don't know if Larry's out there. He's probably going to yell at me, but buy more Nugget for a trade. The VIX. We're up on the week, but volatility is coming out of options. Even Tesla, which we have a trade on right now, a strangle. The implied volatility has been getting crushed. It's good for us because we're option sellers. If you own the options, it's horrible for you. But this is why we sell expensive options and we buy cheap options. Because if you buy cheap options, you get volatility expansion. Well, if you get the direction right and you own the option, you got the direction right, it's growing in value and the implied volatility blows out. Oh, it's beautiful. But the VIX is up on the week, but under a lot of pressure here. Daily view. Remember, PCE comes out tomorrow. This is a 5-minute chart. Daily view, yeah, crushed it today. So what we did here, I think what may be happening is that we broke out here on the 21st. And we're doing a retest now of this breakout point at around 2077. What was the low of the day? 2089. Intraday basis, the VIX was very oversold. It was strong this morning and it faded on the day. And you may be saying, if you're new to trading, why do I care about the VIX? This is the fear index. And usually it trades inversely of the S&P 500. This is pretty bullish close, but it's only a 3-minute chart. Dow Transports down on the week. They rallied today, but a close down below. What is this resistance level now? 14,822 would be pretty bearish. One trading day left to go. Dow Jones Industrial Average. This is a horrible chart. If we close down on the week, this would be a very serious breakdown for the Dow Jones Industrial Average because we had broken out, consolidated. This would be a failure. We need to close out tomorrow above 33,500. We closed out the session today at 33,153. That's a pretty significant move on the day for the Dow Jones to get salvaged. How do we close out the day? Daily view. Stokes are pretty oversold, but they can stay oversold. What they could do is give you a rip your face off rally and then roll back over again. But the Dow oversold, but concerning. S&P 500 weekly breakdown. I mean, I'm thinking that there's going to be a rally here, and I went into the week. I went into the week bearish. The however is that if you go back to the week ahead commentary with members, I said I can make the case for being bullish as well. As it turned out, the primary instinct that we had was that the market was going to go down was right. Now the question is, does it stay down? I just don't think that this market is tapped out yet. Daily view. Bullish reversal bar off the lower band of support. This is the lower band of support that began back in the October lows. If we break this support level, brother, look out below. We were down below it earlier in the day, but the the bull gods came out and salvaged us on volume. So there was no reason for me to stay short this market with this type of price action. Now, if we break support, then I'm going to be shorting aggressively. Qs. I got to tell you, it's a down week, but all down weeks are not made equal. We bounced off of the lower band of support. This is not an ugly chart. I think that we're going to rally here. Daily view. Stokes nearing oversold levels. Volume was really good today. Let's see how we close out the session. 30-minute chart. A little bit of selling into the close, but net, the afternoon was pretty good. It was pretty good. So we'll watch that PCE number. That could tip the scales one way or the other because we're not that far away from support. And if it comes in weak, you're going to see equities rally, meaning if the PCE report comes in weak tomorrow, stocks are going to rally. The banks. Rough week. Very, very rough week. Down 2%. I think the primary reason here is that you have a looming auto loan bubble that hasn't hit earnings yet. You have Credit Suisse. Let's take a look at Credit Suisse. One of the largest banks in the world, trading. It was below $2 the other day. You don't want to see a big bank like this trading below. It should be trading at $50 or more. You don't want to see banks down below $50. Psychologically, it's not a good sign. I would have thought they would have done a reverse split on this, but for whatever reason, they didn't. It doesn't instill confidence. So daily chart of the banks, they bounced today. Not looking good. Technology bounced on the week. We're still down on the week. Daily view. I'm looking for the best sectors to trade here. It's okay. Semis. NVIDIA came out today. We shorted NVIDIA, and we scalped the profit. There wasn't much selling pressure, so didn't stay long on that trade. But we're going to take a look at that chart in a little while, and I'll tell you where I plan on reshorting it. I love the company. I hate the valuation. All right. AQ. NVIDIA we're going to go over. Silver we're going to go over. All right. Biotechs, of which we are long here, and not a good week. Not a good week. Franklin, do we add more or what? What do we do here? You tell me. What do we do? We need a rally here really, really quick. Really, really quick. Should we add more here? Stokes looked good. We're holding support. Paul, hello. How you doing, pal? Larry. I mentioned you earlier, Larry. Could we drop into a trading range of 30? No doubt about it. Yes, no doubt about it. You know, by and large, we've been in the trading range for months now. So, yeah, I agree there's no catalyst. I think that this is a very good trading environment. I mean, when you had QE, you had an artificial market, right? You had a lot of liquidity driving stocks up, but now you have equities needing to rely more on fundamentals, on the Federal Reserve in their commentary, and it's making trading more fun. It's going back to being natural again rather than manipulated. So yeah, I think that you're 100% right. We could be stuck in a trading range for a long, long time, but that's probably why implied volatility has come in so much on options, and that's why we've been buying more options than selling options lately. So yeah, good point, Larry. Let's take a look at intraday chart LABU. Nice dead cat bounce into the close. I think what we need here is a ruthless pullback tomorrow morning on LABU and a higher low. Meaning, I want a ruthless pullback, but I don't want to take out $6.45. I want a higher low and then a blast through the highs of the session, or the last high at least, $6.80. So LABU, we may be adding to tomorrow. I like it here. Now, here's another reason why I think that equities in general, your high beta stocks, your Q names may rally. The consumer staple stocks are flashing a bear flag setup, meaning uh, they're limping up higher, yet they're really not gaining any real estate. Every rally is being sold, and in all probability, this is going to break south. It's going to break down, not break out. And you may be saying, well, wait a minute, that flies in the face of what you're saying is going to be a stock market rally. Yeah, it does in a way. It's counterintuitive. The reason for it is that you're going to have sector rotation. You're going to have money leave the staples, go into the semis, go into technology, especially if yields pull back. So that's why I would probably be looking to short XLP. And even if you take a look at the weekly Stokes here, they're breaking down hard, very, very hard. Daily view. Yeah, I mean, we're right now at a resistance level where it's safe to short. And what I mean by that is that, okay, we short today. I could put my stop loss, excuse me. Come on. I hate when this Windows, Bill Gates, son of a gun. If we close above 73.50, I could stop out. I'm wrong. Or if I wanted to give it a little bit more real estate, room to run, to work, I could stop out on the close above 74 bucks a share. Where would I enter? Well, we close 73.20. What's my risk? Open up small. Then if you're right and we break support, add more, lean into it. All right, Franklin speaking here. I think we are still in the trading range or consolidation. So I would buy it to the man. All right. Tomorrow morning, we're buying LABU, assuming that it doesn't gap through the roof. Okay, so XLP looking like a short weekly bear flag setup, daily setup, pretty lethargic, pretty weak. The market rallied today, and the XLP was down. Clearly an underperformer. In fact, let's do this. Let's do a little bit of an exercise. I'm going to compare. This is what you call a ratio chart, and it'll compare the strength of XLP relative to the Qs, right? So XLP, if it were stronger than the Qs, it would be making higher highs. Since it's weak, it's pulling back, making lower lows. Did we fill the gap today? Might it pop up tomorrow? Maybe. I don't know. I'm not that smart. So we'll see. But I think that in all probability that this is going to break. And if you want to get a more macro view of whether or not this is going to break south, go to a weekly chart. And you can see that on a weekly basis that the XLP is holding up well on a relative basis versus the Qs. The however is I like to set up on the Qs better than I like the XLP long. I want to short XLP, buy Qs. Discretionaries, no time to short. Emerging markets, we're long of emerging markets ex-China. Now, EEM is emerging markets, including China. And this is how you avoid the China risk. EEM is made up of 30% mainland China stocks. So we're at threat of going to war with the Chinese. Automatically overnight, their stocks here go to zero, just like when the Russians invaded the Ukraine. All stocks here went to zero, worthless. I know, I put a trade on. It expired, worthless. So we're down on the week 1.26%. But when you use my ex-China ETF, no China, we're only down on the week 0.85%. So it's outperforming China right now. Energy, a really good reversal week here. I don't know whether or not we're out of the woods. The thing that kept me from shorting energy was the monthly chart because it looked pretty serious, pretty bullish, and it still does. I can't short this. Not yet, anyway. MACD's very extended. Back to the weekly chart. Let's go to a daily chart. Screw it. Daily chart, we gapped up higher today. Relief rally? Yeah, probably. But you need oil. To buy energy, you need to have the price of oil moving up higher. Now, on the week, oil is down on the week. And we are down below, I believe, down below the breakout point. We had broken out 2 weeks ago. No, we're right on top of it. Right on top of it. So we're holding it. Bill Gates is haunting me. Oh, there we go. Now here's the daily view of oil, and I've been pretty bearish on oil of late, and I think it was the right call. Today it was up, and what I'm thinking here is that we have this rounding top on oil. Now this goes back to my case that if oil breaks down, that serves two masters, right? One, it sends a message to the market that the economy is slowing because demand is getting crushed. So what does that mean? It means that the Federal Reserve needs to worry about a weakening economy, not just domestically, but globally. Also, weak oil is bullish for stocks because it's disinflationary. If oil breaks down, it's disinflationary. Now, you may be saying, wait a minute, Bob, sorry, I got to correct you there. No, you're wrong, because the Federal Reserve backs out food and energy. And now with the super core number, they even back out rent, if you could believe that. So in reality, you can't take out all food and energy. And the reason for this is that you have distillates. Those distillates or refined products go into making rubber tires, making pretty much everything in your home. And if oil is expensive, yes, they back out food and energy. That cost of buying oil is going to make its way into manufactured products. And that increases the CPI at the core, as well as the headline number. So if this drops down, equities can rally. So that's my thesis. Now, if we get hot PCE numbers, hot CPI numbers, if we get these moronic Fed governors that continue to come out saying that we're going to increase rates by a half point, if they keep talking like that, they're going to crush the market. There's nothing that my chart could do about it. They're going to crush the market, because what's happening right now is that the rate increases from 2023 are just now hitting the economy. We haven't seen the full brunt of it yet. And you're already seeing massive layoffs. So as oil breaks down, as nat gas continues to break out, if it does break down, it may not. It's been so beaten up. But nat gas, if you take a look at the chart of nat gas lately, I mean, it's been annihilated. It took me to the woodshed. So long story short, weak oil is bearish for energy stocks, but good, bullish for tech stocks. Your ARK fund stocks, Q stocks, they'll go up. Gold. Oh, I'm sorry. Gasoline. Potential head and shoulders setup formation here. I identified this a long while ago, and it's really beginning to form up here. So do we have a head and shoulders setup? Maybe left shoulder head, right shoulder on gasoline. Fingers crossed, right? Gold. Now, gold has had a horrible week. It's trying to hold on to 1825. It closed the day out at 1826. Stokes are moving lower. Don't like that. Down volume is very light. Daily chart. Took it on the chin today. I think that if they kill gold tomorrow, I'll probably be nibbling at around 1820 to 1815 the ounce on gold, because these Stokes are pretty oversold and we're due for a bounce. Let's take a look at the GLD intraday. See if we have anything setting up here. Go with a 4-hour chart. We're still in that downtrend channel. Yeah, can't touch it right now. Got to wait for a washout. All right, gold mining stocks. Now we own these. We stopped out of a good portion of the position a few weeks ago, and I started buying back last week. Yeah, too soon, but I plan on buying back more, especially when I see the dollar begin to peter out. Stokes are trading down below 50. I think that if I buy right now, I can only do it as a trade, a relief rally trade, because we may be going lower here, significantly lower, unless, of course, these Stokes begin to hook up and begin to move north rather than south. Daily view. Yeah, Stokes are pretty oversold. Well, the last time you saw a setup like this was back here and resulted in a nice rally. Daily chart's looking good. So I think that this could only be treated as a trade. All right, more to come, members. We'll do more analysis on this. We need to watch the U.S. dollar just to show you the relationship. Bring up the UUP. So GDX versus UUP. Why does that not look right? I don't think this is calculating correctly. Oh, no, it is. Yeah, relative underperformer. Okay, I'm dyslexic today. So this is accurate. Vastly underperforming the dollar. And you know what? A better way to illustrate the inverse correlation is this. Bring up the correlation UUP above. I know many of you that are out there that are new to trading, you don't understand why we're talking about certain really weird things like inverse correlations, the dollar versus gold, the dollar versus the gold mining stocks. You know, you need to know these. If you want to be successful, you need to know the relationships or the inverse relationships. Now, in this case here, you can see the GDXJ, which is a gold mining ETF, versus the US dollar. If it were, uh, they're pretty much trade exactly inversely. I'll put it to you that way. There's a negative spot 9, and 98% of the time, they trade inversely of each other. The only time I ever see these trade in tandem, geopolitical risk. When you have a bombing overseas, military strikes overseas, fear, money goes rotating into the US dollar and into gold. Gold stocks follow. But in normal trading days, it doesn't happen. So this is why it's so critical. Don't put on your gold mining stock trade unless you know that the dollar is going to pull back. Silver, which I promised I would get to. Stokes trading down below 50. Rallies tend to fade. End of story. We cannot go adding more to silver until this gets resolved. And for this to get resolved, meaning these downward sloping lines, I know that you maybe look at them saying, oh, they're two lines. What do they matter? They tell you a story. When they're rising, shares are under accumulation, gaining momentum. Up here, they become overbought. You got to get ready to bail. Doesn't mean you just go sell. Maybe you want to scale out. When they're trading down below 50, man, there's negative momentum. You want to be out of the. You don't want to be on the railroad tracks when that train's coming down the pike. You see a rally in the morning, you fade it. You get out. You short it. Daily view. Now, what's interesting with AGQ is that we actually broke out a couple of days ago on a daily time frame. And ever since, we've been pulling back and doing a retest. Interesting. So if the dollar pulls back, expect a pop here, but the dollar is probably going to regain momentum. So I'm worried about staying long of a big position in silver right now and gold. And I think that is it. What is Meta doing today? Meta looking interesting. Amazon looking interesting. Amazon's looking really interesting. Daily view. Okay. All right. So for those that are just joining in or just joining in the middle, we're going to be going over on Saturday the 30-minute chart club. We meet twice a week. We're going to go over the same 30 charts every week, and we'll identify those stocks that have good setups. So join us on Saturday. It's a private live stream. Link below. Sign up, enter your email address. We hate spam too. All right, I want to talk to you about my hero of the day is U.S. Congressman Tom Emmer, Republican, Minnesota. Apparently, he's the House whip. So he's a pretty powerful guy. And I'll be honest with you, I'm embarrassed. I thought I was pretty up on politics. I never heard of the gentleman. But when I saw this initially, I negative projected. I didn't see the word prohibit. And I almost punched my computer screen. The way I read it was U.S. legislators introduced bill that would, and I just thought create CBDCs. All right. I was happy to see when I opened this up that Congressman Emmer, who I tweeted, and I invited him on, and I'm going to continue to try to get him on to explain his bill. Because if you're not familiar with what central bank digital currencies are, we began the program tonight talking about wokeness and this the passion the World Economic Forum has for censorship, for control, for the control of your mind. This Orwellian concept of what is the word? Right think. And the only way to really enforce it ultimately is through controlling your spending power. You saw that soy boy Justin Trudeau, Canadian Prime Minister, what he did to those truckers who demonstrated, seized their bank accounts without due process. So the central bank digital currency would do away with cash. It will never be successful if there's cash. Cash must be taken out of the system. Nigeria tried it and abandoned it, reinstituted it, and got rid of cash. It is getting rid of cash. So that way, it's the only way to adopt it because people don't want this. And the problem with digital currency, we already have it. Let's face it. We already have digital currency. You have Bitcoin. The US dollar is digital, right? The Federal Reserve doesn't go out and print paper dollars. They just add them to the balance sheet. That's simple as that. So it's not as if they printed $1 billion overnight that there's a new $1 billion in paper money out there. It's digital money. So the difference is this: is that if they adopt, and it would take an act of Congress, if they adopted the digital dollar, you would have an account with the Federal Reserve, whether you like it or not. And keep in mind, the Federal Reserve is as federal as Federal Express. It's a private entity. It's a quasi-governmental agency. It's owned by the money center banks. So, and families, the Rothschilds, all the big families that you never see on TV and never will. So they want control, and it wouldn't be so bad, but the money is programmable. I'll take you back to, I forget what year it was, around the financial crisis. So you're talking about the late 2000s, and Cyprus had a big bubble in their banking sector, and they did what you call bail-ins. And what that meant was that the government couldn't bail out the banks. So what they did is they seized the deposits of the depositors. They took their money. Our Congress loved it so much, they instituted the Dodd-Frank rule. And the Dodd-Frank amendment, which was passed and signed into law by Obama, allows for the next time we have a new banking crisis, the federal government does not bail out the banks. Guess who bails out the banks? You do. I do. We bail out the banks. That's called a bail-in. That sets the stage for digital currency. It's programmable. So suppose the Federal Reserve says, hey, listen, Congress, you guys need to, we need to stimulate the economy. You need to spend more money. They can't spend more money because bond yields are too high. They can't afford it anymore. Okay, Congress says to the Federal Reserve, no, we're not going to do that. What you're going to do is you're going to go into that programmable money and you're going to put an expiration date on that money so that if you don't spend it, X amount, 10% of it, whatever they decide within the next 3 months, you lose it. It expires. Or they pass this Green New Deal nonsense and you have met your carbon requirements or carbon allotments for the week. Well, they shut you down. So they control everything. They don't like what you say, they could shut you down. Your freedom is gone. Enter Congressman Emmer. So Congressman Emmer, and I would encourage, even if you're not in the district of Congressman Emmer, I would, as a matter of fact, he's got it here. I would not email. I would tweet. I would tweet all of these congressmen tonight Call your congressman. Let them know we are watching. And this guy's the majority whip. He's a powerful guy. He's second in power to the House chairman, McCarthy. Okay, so what this bill does, it prohibits the Fed from issuing a CBDC directly to anyone. So in short, the Federal Reserve cannot be your bank. It bars the Fed from using CBDC to implement monetary policy to control the economy. And that's what they want. They want that control. This is the operative word: control. Requires the Fed CBDC projects to be transparent to Congress and the American people. I'm sure there's more here, but please, I'll drop the link to the congressman. Let's show him our support and get on your Congress people. Let them know. Let them know. We watch you. We are see you. We watching you. Tim, hello, brother. We have a ledger banking system. Yes. Bitcoin decentralized, where the dollar is centralized with the banks. The middle guy is gone when you own Bitcoin. Yes, Bonnie Bean. You need to worry about. You need to worry about. You're welcome, Franklin. You need to worry about. Remember the on ramp. They want to control the on ramp and the off ramp to Bitcoin. So to go buying Bitcoin, you need, if they implement the digital dollar, can they ban you from buying Bitcoin? Think about it. I hate to be a negative Nelly on this, but let's face what we've seen our government do over the past few years is just bananas. So I only think the worst of them and what they're capable of doing. So let's do some chart requests. Oh, before we do that, Fed's balance sheet flatlined last week. All right. So the other day we did 30-minute chart club. Again, for those joining in, link below. We're going to meet on Saturday, 2 p.m. Join us, private live stream. Tim, hey Bob, PXD gives great dividend. Bought it back to stock, but looks like it wants to break down. What do you think? We'll take a look. PXD. We'll take a look. All right, so sign up 30-minute chart club and let's get moving. Okay, we're going to be using TrendSpider automated technical analysis. Link below, 35% discount code. All right, so we went over Adobe as one of our trades, potential trades the other day, and it did move higher. We did the last live stream on the 21st. That was right here. And initially, it moved up, but then it reversed. So we got the direction right, but ultimately it reversed. So the setup was there, but you can see that with the automated trend lines picked up a breakout. Take them off, put them back on. There you go. That's the AI. So I would avoid this stock. Adobe. We'll revisit it on Saturday, but right now it's looking very, very bad. I think they report earnings, but that's in March. The other stock we were looking at was Apple. Now, Apple, that was back here. And Apple has risen. So we got that one right. But what does it look like on a daily time frame? It's not looking bad. Let's get these drawings off here. It's looking pretty good. So it's setting up here. We hit resistance today and backed off. I wouldn't buy it yet, but Apple's setting up nicely. Qualcomm, this was a buy. Yeah, that was right here. And that's up nicely. But we're at resistance. How do I know it's resistance? The AI, folks. Click of a button. So just be careful here. Qualcomm had a nice little run over the past couple of days. Avoid. Again, folks, you want to go over these charts, 30-minute chart club below. It's free. AVGO. This one we did not get right. This one continued to fall. Yeah, that just kept drifting lower, just melted down. And I don't think it never did hit our support level. It was a toss up between, I think it was Broadcom, not Broad. No, this is Broadcom. AVGO is Broadcom. I forget what the other tech name was that we were looking at, and it was a toss up. And AVGO, that's right. We were expecting it to hit support, and then we were looking to buy it. And I guess it hit support, and it's looking pretty good. It's breaking out now, AVGO. On an intraday basis. I don't like the daily chart too much. It's bounced back a little bit. I'm not loving it, though. All right, let's do some chart requests here, and we'll sign off. PXD. Yeah, you're going to want to avoid this one. This is a breakdown. We broke down. This is a weekly chart. Last week, this week, they tried to rally it. Rejection. Very weak price action. Daily view. Today was a outside bar or a bearish engulfing bar. If you're not familiar with this terminologies that I'm using, 5-part video tutorial below, 5-part series on my top 5 favorite candlestick patterns, free. Look for support down here at 196.98 on PXD. MMM. Last I looked, I was breaking down hard. Yeah, I would avoid this one. You could argue that it's a short, especially with the Dow stocks breaking down. Yeah. So again, folks, this is the power of the automated trend lines. Take them off, put them on. We hit resistance, and then now we've broken down below support. I would avoid this. If it rallies back and closes back above, 110, 111 per share, then I would revisit it. Right now, it's under a lot of pressure. I would avoid it. You are welcome, Tim. Anytime, pal. Excuse me. Tesla. Tesla has become range bound. And I don't like the daily Stokes on Tesla. In fact, RSI is not looking that good either. Case in point, lower highs, Stokes rolling over. Now, that doesn't mean you short this stock. It could easily break out. Sorry, folks. It could easily break out. But I don't think it could be bought yet. I just don't think it could be bought yet. I would rather, if you're bullish on this stock, this is one of the few stocks that are out there that has premium that is very expensive, meaning options are very expensive. So rather than buying the shares now, if you're bullish longer term, why not sell some puts just out of the money, at the money, whatever? At least you reduce your basis cost if they're assigned to you. But otherwise, if you're not going to do that, I would wait for the breakout above resistance here in the line in black. So right now, I'm cautious on it. We're losing momentum on a daily time frame. I'm not going to worry too much until these close down below the neutral mark at 50. Then I begin to worry. We are going to leave it off with CG for Pedro. CG, the Carlyle Group. I haven't looked at this one in a long time. Higher lows, man. Higher lows. Weekly chart looking really, really good. What happened to my automated trend lines here? There we go. The thing with this chart, though, is that you have resistance immediately above at around $37 a share. What I would do here is, if you want to scratch the itch, you're welcome, TZ. Paul, great night. Thank you for being here. I would wait for a breakout on a weekly time frame. I don't want any sensitivity. I just want to know the shares have closed above a weekly resistance, and then I would be a buyer. But right now, if you buy now, you could buy now. Stay small, scratch the itch, get it out of the way. But if you buy now, if you get too aggressive now, you're hoping for a breakout. So you don't want to trade with hopium. That's always going to end poorly. So scratch the itch now if you're bullish. Wait for a breakout. How's the daily chart look? Yeah, it's at resistance. So again, I would just set up an alert here. Look for a breakout above this resistance level on a closing basis, and then nibble on the trade. Buy on strength. All right, folks, thank you for being here. Hit the like button, subscribe to the channel. We went a little bit over tonight, but that's always good. Thank you for being here. Don't forget about TrendSpider, 7-day free trial offer. I give it away free to our silver and gold level members. And don't forget to join the 30-minute chart club. Link below. We're going to be meeting on Saturday, private live stream. You can catch the replay later on, but if you want to join in the conversation, join the live stream. We keep it private, For serious traders, it doesn't matter if you're experienced, inexperienced. I don't care. I just love the engagement. So join us. Link below. Thanks for being here. Have a great weekend and a profitable trading day tomorrow. Be well.